Can you see my screen? I haven't been in a trend trade in a while. Like Microsoft is one of those rare moments. What do you think of FCell? Let's take a look at FCell. Yeah, so FCell, I didn't like trading it. Someone mentioned FCell in Discord chat, and I told that FCell is just too late. It already did a huge move. The main reason I didn't watch FCell at the open is that it was already far from view up, and I said I like my breakouts to be close to view up. The second thing, we dropped around $3 in the pre-market, so we made most of the move in the pre-market. I think I didn't even post it on my watch list, right? It is interesting, but it was late. Someone else asked about CCIV. I still didn't like CCIV so much because we broke in the pre-market and we already did a decent move up there. We did an ABCD pattern and the breakout was decent on CCIV, but still, I mean, it was a little bit late for me. Tesla volume? It's not that crazy, right? I mean, on Tesla, 12 million, it's not so much. I mean, this year's 1 minute, it's a little bit green or big, but I can understand. Could anyone tell us why this candle around here is with an increased volume? There is a reason, not 100% right, but that could be the reason. Yeah, exactly. So that was the support around here. And if anyone was long in it, they're definitely getting stopped out around here. The next thing is it's breaking a level, and scalpers are trading breakouts, right? So the moment it breaks, or algos trades, high frequency trading, the moment it just breaks a level, it goes in for a quick scalp. So people are shorting it around here as well, which caused it to drop. But this doesn't mean a lot. I mean, overall, the daily chart is choppy, so you can't really tell where it could go right now. I mean, the 60 looks weird. It looks weak. The daily doesn't look like anything, and there is a lot of support down here. On the 60, you see it's getting bought back up. So this is definitely not the best stock to watch. Yes, Sarah, that's it. So let's take a look at what you did today. Gigi, long time I didn't see your trades. Have you been trading lately? Where is the screenshot? Why doesn't it show here? So you've been trading, and how were you doing the last couple of weeks? Sarah, they are recorded and I'm posting them on YouTube. Okay, nothing crazy. Okay, that's good. Good that you're green. So you also caught Microsoft. That's awesome. Let's take a look. You did on Microsoft way better than me. So I guess you took it to the long side and your stop loss was below the week. Now let's go from the bigger time frame, guys, to the smaller time frames. And I loved Microsoft for a trend trade today for one reason. Let me get my Epic pen. It wasn't only Microsoft, it was Microsoft, INTC, and MU. And I expected them all to do the same thing, so I didn't want to get into all of them at the same time. Honestly, Microsoft was the choppiest of them, but eventually it ran. So in the daily chart, we were dropping down, right? There was sort of a cup and handle around here, which got broken. It's a reverse cup and handle. Anyway, after that, it's coming up, pulling back, and coming back up. So now we're having a reverse head and shoulder on an uptrend on a chart, which is overall strong. On the previous day, we closed as a hammer. Looking at the hammer, I could assume that today we could run at least to this level around here. So looking at the daily chart, I told myself, okay, at least $2 move could be right there. Looking at the 60-minute chart, we also have a hammer. And we're having a new 60-minute high breaking the range around here. So that also gives me sort of bullish bias. Looking at the 5-minute chart, there is a 3-bar play. And this is where Gigi took it to the long side on the new 5-minute high. Another add at the breakout, and then partial all the way to 240. And honestly, partial 240 is really smart. I realized that a little bit late because we already did $5 move. And if you take a look at Microsoft, the average to range in this thing is somewhere around $5. So you see this from 235 all the way to 240. That's our $5 move. We're struggling at the average true range. You definitely need to either partial or exit. at the highs right there. Now, on the 1 minute chart, look at the entry. That's awesome. I mean, honestly, I tried it for the first time after the doji. I had a little bit fun, but I knew this is not so cool. I knew this is not the ideal one or the ideal entry. I had my stop loss really tight, got stopped out, re-entered on it with a new stop, which was good. But unfortunately, I got myself out because instead of setting a limit order at the high, I sold with a market order, because of which I just simply got stopped out another time. Re-entered, and that was an awesome ad. I really wish I added right here, GG. That was great, and you held it all the way to 240. How many R's here? Six R's. Awesome. I like that. Good job. All right, Zach, let's see what you did. So Zach traded mRNA. R is the amount you're risking per trade. So if Gigi was risking $50 per trade, that's his R. He made around $300 on this trade. So he made 6 times more than the amount he's risking. All right, you're welcome. So Zach and mRNA, let's see what you saw right here. I actually also liked mRNA slightly to the long side, but one thing I didn't like about mRNA is that we are just going up, something like this. And we know that candles, they overlap, right? Especially if it's not a range, if it's like this, the candle will not be going this way, right? It will open around here, it will go down, not make a new low, and then squeeze back up. And I don't like this around here because I could see a good setup on the 5-minute chart, for example, an ABCD pattern right there. I'd be taking it to the long side on the new 60-minute high, and then it will get me out because it will be going down, and then it will go in my favor. So a little bit of extra stops, which I don't like. It doesn't mean that you should not trade those, but for now, I'm working on ranges for one reason, because if it breaks the range or makes a new 60-minute high after it formed the range, it usually runs, at least for a little bit. If it's going up, you need to approach this differently. You can't trade it immediately at the break. I personally will avoid the break. I will let it go against me. Then the moment it comes in my favor, that's when I'm going to be taking it to the long side. So you took it to the long side. This is where it came back down again for the overlap, and then it's coming back up, and it's breaking. That was a good place to re-enter. So the setup was good. It ended up dropping, which is a fake breakdown, and then squeezed back up, Zach, which was a good place to re-enter. Don't give up from one attempt. Give the stock you're watching, especially if you planned it, multiple stabs. Around here on Microsoft, you could see that I struggled. First time, stopped out. Second time, add. And that was my hotkey mistake, where I just partialed instead of setting a limit order at high, and then I got stopped out. So 1.2 R, loser, and then I re-enter, which is finally a winner. You can't really nail it every single time from the first attempt. Sometimes you need to give it a few stabs, and as long as the setup still didn't fail, keep watching it and give it another try. Nadia traded MU. MU is good. I like this, and I like your re-entry. That's cool. So look at this. Nadia traded MU, and Nadia traded it for a parabolic reversal. If you take a look at this thing, 1, 2, 3, 4, 5 consecutive 5-minute candles, and we know that after 3 consecutive 5-minute candles, we need to look for a reversal, right? Now, I assume that the red line is VWAP, right? So you can take it on the third candle. Why? Anyone? Why will not be taking it to the third candle, which was somewhere around here? We had the doji, we had a new low. Why should not we take it there? No, I mean to the short side. Why can't we take it to the short side for a parabolic reversal on the third candle? I mean, we do look for a parabolic reversal on the third candle, but not in this case. Yeah, exactly. There is VWAP between our entry and the 9 EMA, so we can't do that. On parabolic reversals, you definitely need to see your 9 EMA on the 5-minute chart before VWAP, or that VWAP should be your target. So now you wait a little bit. It gave us 5 consecutive candles, and now VWAP is a little bit far. So taking it to the short side after the doji, which fails, Nothing bad about it. Now you're having a shooting star at the high of the day on the 1 minute chart. Really nice looking red shooting star with a huge wick on the top. Entry on a new 1 minute low, stop loss the wick, right, or half of the wick. That's your risk. That is your reward. Nice partials, and then you're exiting at a new 5 minute high. Now this ad wasn't the best, to be honest, Nadia, for one reason. It is already close to the 9 a.m. and the 5 minute chart, and it's starting to form an ABCD pattern. If it's consolidating for 10-15 minutes, you could assume that, okay, we're forming an ABCD pattern type 1 or type 2. If it drops down, immediately goes up, and then immediately goes down, here you could add. It will be like on the second candle, right? If it consolidates for like 3-4 candles, just avoid the ads, and you could even take a big partial if you still have some positions left. Good job, and nice re-entry there. In your ABC lecture, we say that tweezers are a strong confirmation, and you will go for it if you see them. If you see the tweezers that are upside down relative to the... So tweezers are not only shooting stars, okay? Like, let me show you. Like these around here, green, then red, are called tweezers, okay? These around here, green, then red, are also called tweezers, right? These around here, green, then red, are also called tweezers. Tweezers are two identical small candles, okay? And depending on how they look and their position, they could give you some different confirmations. If you see the tweezer bottom at the low of the day, these kind of tweezers, or these kind of tweezers, or maybe the hammers, double hammers, this could tell you that this could go to the long side, okay? If you see these tweezers at the high of the day, they could tell you that this thing could reverse, okay? If you see those tweezers at the low of the pullback, for example, the stock dropped down and it pulled back into the 9 EMA, and you see double reverse hammers, which are those kind of tweezers, or those, you could take it to the short side for trade continuation. But if you see these type of tweezers closer to the 9 EMA on the 5 minute chart, going down, pulling back, and then you see those ones, you don't take it for continuation to the short side. Does it make sense? Perfect. So let me check it. This was Cody, right? Cody, this is your trade? Awesome. So you traded APHA, and you traded APHA to the short side. Now, looking at APHA, I personally would have avoided the short on this one. Looking at those time frames, the short is awesome, no doubt. But looking at the 60-minute chart, okay, we broke the low of the day. We're having room all the way down here, which is also decent. Looking at the daily chart, overall, it is strong, and I'm afraid that it could pull back slightly, make a higher low on the daily chart, and then squeeze back up. So for my style, I personally would have avoided taking this thing to the short side. Based on the other time frames, this was good for short side. Is it bad trade? No, it's not a bad trade. It is a good trade, but it doesn't have everything I want to see in my trade. Now, what did you do around here? You took it to the short side with full size, stop loss somewhere around view up or a little bit above view up, which is decent. You gave it some room. Now it's dropping back, giving you a reverse ABCD pattern with a good confirmation candle up here, and you took it to the short side. I would have waited a little bit around here, give it this curling price action around here, and you will have the candlestick pattern confirmed by that time. So it will be a bullish engulfing sandwich, or a 3-bar play, however you want to call it. In this case, it's more of a bullish engulfing sandwich, which is a weak pattern. And then a new 5-minute low. This would have been a good place to add. Stop loss the middle of the bullish engulfing sandwich, and then partial all the way to the low of the day. The way you managed the trade was also really smart and good. I like your partials. Just a little bit at the low of the day in case it forms a double bottom, and exited all out at the break of 21. There was increasing volume at the low of the day, guys. Look at this. And that was smart. Oh my God, sorry. Let me fix that. Fixed it. So looking at the 5-minute chart, you're having 1, 2, 3. You have 3 consecutive 5-minute candles. Looking at the low of the day, you're having increasing volume. And now you're having the tweezer bottom. And what is that? That's a signal that now we might have a parabolic reversal. A parabolic reversal which goes all the way to the 9 EMA on the 5-minute chart. Do you really want to hold it all the way to the 9 EMA? And that's actually like 60 cents move, it's too much, right? Especially on a stock which made $1 move in your favor. So yeah, it was smart really to bail down here instead of holding it for the pullback. That is really good management. Get that Epic Games on your computer. Is it annoying you, Devin? Sorry about that. There is a new season for Fortnite and I'm excited to play. I thought the day was extended to the upside and needed to pull back. Yeah, that's definitely true. We know that candles are overlapping, right? They are not moving like this. So it could open here, which happened on the daily, go all the way down, not making a low, and then squeeze back up. And tomorrow, maybe a continuation. The problem with this here is I don't know how much it will overlap. Only this, or this, or this, or this, right? I don't know how much it could overlap. It could go all the way down here, and then squeeze back up. Let's take a look at what it's doing right now, actually. I'm really interested in seeing that. So yeah, so it's actually still dropping. You see, it's still going down. Honestly, if this thing goes here, or closer to here, or even around here, if it starts forming an extreme reversal setup, it would be good. It will not be that bad. So there is a resistance somewhere around here, 2050. We're dropping into that level, and if we're having like a double bottom and your 15-minute high across of the 50 with the 9 and the 20, that would be actually a decent extreme reversal. We'll see what it's going to do by the end of our trade review session. So let's see this trade here. That is mRNA. You traded this thing to the long side. I see that entry right there on the 60-minute chart on a new 60-minute high. Let's take a look at the smaller time frame. The daily chart gapped up, also strength. I like that, right? The 5-minute chart, there is an ABCD pattern. I like that as well. And on the 1-minute chart, there is the W shape around here. I can't see the green triangle anywhere around here. Where it's like, I assume it will be there. What's the entry? 150, 150. Oh, you took it earlier. So that was a little bit risky, honestly. I see the entries here. Yeah, but that was a little bit risky because looking at this, it started dropping down and it gave us a reverse ABCD pattern, and it could have continued doing that. You see, it could have continued doing that. You want to make sure that this is not happening, right? I see that there is a tweezer bottom, which gave you some decent confirmation. There is moving average or view up. I think here the yellow line is view up, right? And that was enough for you. But personally, for me, it's not enough. I need to make sure that the setups against me are not working. The moment I make sure that, okay, there is no setup against me and it's starting to go in my favor, I'll be taking it to the long side. Stop was the last level it bounced from, and then get that 2-to-1. Your stop loss was really tight. I guess that was your first 2-to-1, and then you partialed all the way for the break of the high of the day. Still decent, right? But a little bit more confirmation will not kill anyone. It will only increase your win rate and decrease your lose rate. Good job there. So let's continue. Dustin traded GPRO. I wasn't watching this one. Let's take a look. So this is a parabolic reversal. Honestly, not bad. This is literally not bad. Looking at this on the 5-minute chart, 1. Yeah, oh my God. I will not count those ones because this is a range. 1, 2, 3, 4, 5, 6, 7, right? 7 consecutive 5-minute candle. High of the day, increasing volume with a shooting star. You were really brave getting it around here, but still not bad. You could see that it's wicking down. That's tweezer top around here, and you got it as close as possible to the resistance. So wide of a stop. Never use like exactly the wick, especially on stocks which run a lot like this. It could just simply break the wick and spike 10-20 cents. You could get a lot of slippage. So have your stop loss at least 2 cents below it, because if it gets there, it will mostly get to your stop loss, and you want to survive these pullbacks. And there is also a level. I guess this is a pivot point, which it held. That's awesome. Held it through the consolidation, and that's an awesome reward all the way into the 9 and the 5 and the 20 and the 5. So you could have left 5%. Always do that for a bigger run, for bigger targets. But other than that, this is awesome. Yeah, it rejected it like literally to the penny with everything else we want to see. Really good short there. So Joe A traded Apple. Apple was tough, right? Honestly, it wasn't that tough. If you manage to put your stop loss at the right place, looking at this, it opened so strong. If you catch it for 1 minute open range breakout, you'll put your stop loss at the low right there. You'll take partial, then you'll get subbed out, which is not bad. Now around here, you avoid it. It's sitting below you up and around the moving averages, so you do nothing on it. It's going up, you still do nothing. It's breaking up. Okay, we're having a double bottom. We're breaking up. You could take it to the long side, have your stop loss in the middle, right? So that's your entry. That's your ad. I like that. I like the fact that you didn't get stopped out. Now let's take a look at the 5-minute chart. What is this pattern around here? Anyone? Not exactly, but it's still that pattern. Exactly. That's the bearish engulfing sandwich, right? And this is a bullish pattern. And you're taking it on a new 5-minute high. What's your stop loss on the bearish engulfing sandwich? Half. And now around here, you're having another bearish engulfing sandwich. So you could add to your position and move your stop loss to the low instead of having it exactly somewhere down here at the middle. Then partial all the way up. Now look at this previous resistance. You see, this is the resistance down here. Previous resistance is acting as support. There was no reason to exit around here, and there was no reason to add around here. You are adding on a new 5-minute low. That wasn't the greatest idea. I know why you added because of the 1-minute chart, but you need to keep an eye also on the 5-minute chart. Now that it's dropping down, the previous resistance is acting as a support. There is a W shape on the 1-minute chart. You could enter here, or add to your position, and then hold it. Now again, another quick mistake. You are partialing, you are exiting, or you are panicking, exiting at break even. No reason to do that. Remember the stages: range, breakout, retest, and then there will be a trend. And as long as it's making higher highs and higher lows, there is no reason to just bail on it, right? Higher low, higher low, higher low, higher low, higher low. Like literally no reason to bail even here, unless it did the average true range move. So you re-entered one more time, which is good. Nice partials. And one more time, you're doing that mistake. You're adding on the way down. After shooting star at the high of the day, you're adding it around here. Better avoid that. Now look at this. What was the right way to play this one, especially if you want to hold it for a trend? Go into the long side, have your stop loss somewhere around here. Take your partials. You know that it could retest, right? I know that it could pull back and continue higher, but I also know the fact that this thing could retest. And because I know that retests happen 70% of the times, I'm going to avoid adding around here, because if I add around here and move my stop loss around here, I'll get stopped out. That will ruin my risk to reward. So it either runs in my favor, I'm already having a good average, and I'm just simply going to hold it to my position, or I'm going to wait for the retest, and then I'm going to add on a new 5-minute high. That's what I'm doing, and now that's good. I'm holding. Going up, pulling back, coming back up. Okay, now I'm having an ABCD pattern after the retest. There is no reason to have my stop loss down here. I'm going to add to my position on the new high, and then I'm going to partial at the breaks, right? Now look at this. It's dropping down. No reason to add, right? No reason to add, no reason to add, and then hold it. And even if I add, I'll make sure that my stop loss is the middle of the range, because around here we're forming a new range, and I know that we could retest, and the retest of this new range is the middle. What's the area of the retest? The area of the retest here is the 60-minute. You could see how clear it is on the 60-minute chart. Where is the 60? I lost it. Do you have the 60? What is the 60? Okay, we have the 15. It's not bad. On the 15, you could see this around here. So it held it in the pre-market, then it held it after market open, then it finally broke it, and then it's pulling back and it's retesting it. You see? But other than that, really good. I see that you made more money than you lost on it. I like your bias. You built your bias to the right way, and you were entering most, at least your entries were after the confirmation. And I see that your entries, they're right. Most of the time, your entries are really good, but your ads lack confirmation. If you manage to add the way you enter, you will do way, way better. So this is Mary. You're welcome. Yeah, but you will work on that. Ads also gave me some pain. You can see that I'll break down my Microsoft trade in detail in a recap I'm going to do today. But you could see I didn't add in my Microsoft to load. Why is that? Because there was no reason for me to add. I mean, not that there was no reason for me to add, but I was hesitant. I mean, I considered adding around here, to be honest. But anyway, if I add around here and I have my stop loss 236, what's that? 60. Let me get it here. If I add around there, and that's my new stop loss 236.60, I know that I could get stopped out because it could pull back to the 9 and the 5-minute chart. And so far, we didn't do a new low. We're just making higher low, higher low, higher low, higher low. I was waiting for this. I was waiting for a new low and then a bounce before I add into my position. So I knew that adding around here could just simply cost me the trade. Cost me the good average, I'm in. So I just decided not to do anything, and I held on it, and that's it. Finally, I'm making a new low for the first time since we started down there, and we're coming back up. And look at this with my remaining position. Can you imagine how many I added? Like, this was my average. This is my new place where I entered. So I'm doubling my position, my remaining position. I'm quadrupling my new position. And I'm doubling it like one more time. So instead of being like, let's assume that I was 5% in, right? I ended up with 40% of my original position. And they're just small partials in case we're going to do a fake breakout, right? They just hold it, not adding anymore because we are already closer to the average true range move, and I don't want this trade to cost me anything. And I just exit all the moment I see that, okay, this is a current price action somewhere around here, and now we're dropping down. That's it. You see, like only one add in this trade because I want to survive. I want to hold on with a good average. Let me show you something else. Like sometimes you should add a lot. Let me get you some stuff I was practicing on in the market replay. So the trade which I'm going to share with you right now, it's not a real trade. It is me practicing in the market replay feature, but I need to open it to show you that. Let's see. Give me 1 second. I'll open it now. Okay, good question, IG. On Microsoft around here on my ad, it was closer to the 9 EMA on the 5-minute chart, and there was a trap around here. This is something I'm going to include in a webinar I'm going to make soon. Those are traps. There will be like sort of a level which is holding, and people seeing that the stock is extended, and then they are waiting for a breakout. They're seeing this holding. They're seeing there is a head and shoulders. It's holding, and they want to short it. They'll be taken to the short side the moment it breaks, and then immediately it gets squeezed back up. And usually after this, it never looks back up. It continues the trend. And my stop loss in this case, after the ad, is not the low of the week. My stop loss is the last level it was holding, because those weeks, they usually are fake and it never comes back there back then. I'm going to show you another example I'm practicing on in the market replay, and this will make more sense to you. Let me see where that is. Okay, let me actually show you multiple examples. Okay, this will be one of them. And I want to show you one else for ads. Okay, this will not be bad. Those are not real trades. I wish I could trade like this when I'm in my live account, but in simulator, I'm way more patient, and I don't care about my winners. I just let them run. So I'm taking my position to the long side because of the range on the 60-minute chart, right? Starting to partial all the way up, taking a little bit more partials because of the heavy entry right there, adding after the pullback, partialing all the way up. And look at this. This is what happened in Microsoft, right? I see that there is a head and shoulder on an uptrend, which breaks down. This is the 9 EMA on the 15-minute chart, and then it comes back up. And usually those, they never look back down. See, this is what I saw right there, but what I saw on Microsoft was in the 1 minute chart, and this is here on the 5 minute chart. Partialing all the way up, pull back, and then continuing the trend. Let's take a look at this one here. I'm done. Anyway, plug. What do we see right there? I don't care about a short on this position because overall we are strong, and I know that we could pull back and then we could run all the way back up there. The 60-minute chart, there is the lows of the 60, and I know that candles, they overlap. It could go all the way down and then squeeze back up. At the open, I'm taking it to the long side for a breakout, which unfortunately fails. Not really mad about it. Dropping down, having a 1, 2, 3 parabolic reversal closer to the support on the 60-minute chart for confirmation, taking it to the long side, partialing, having an ABCD pattern, right? We are pulling back, new candle, taking it to the long side, partialing all the way up. Now dropping down, coming back up. Look at this. I'm adding around here, but I'm not putting my stop loss at the low around here because simply those traps or those wicks around here, they're happening a lot. So what am I doing? I'm giving my stop loss extra room, the half, somewhere down there, just to be safe, because my average is good and I don't want one simple add to ruin my trade. I will not tighten my stop loss so much. So I'm giving it that extra room now that we're dropping around here and I see that, okay, actually that was it around here and now we're coming back up. I'm adding one more time to my position and then run up there. You see what you need to keep in your trades? On your trend trades, you always need to keep your average low. You can't just have it at the last level it bounced from, especially on the 1 minute chart. Does it make sense? So the average low, it means your entry. For example, you entered around here, that's your average. You are adding around here, you don't want to tighten your average so much. In this Microsoft trade, I did a mistake. I tightened it so much for a continuation, but that was bad. This is the difference between me trading in my live account and me trading in simulator. In simulator, I know what's the right thing and how I need to do it. On live, I care more about P&L, and it's something I'm working on. That's why I'm doing the market replay feature. I want to improve my trading to be able to trade my live account literally like I'm trading in my demo account, in my market replay account. But you will always, and I promise you this, you will always do worse in your market replay, in your live account than you're doing in your market replay and in your simulator. That's why you need to be good in market replay and simulator, so that if you are a little bit worse when you're trading in your live account, you will still be profitable. And then step by step, your accuracy, your win rate will be increasing. If you're entering during the intraday, and you should not hold it for a trend. Depending on the place you entered at, depending on the candle you entered at the pullback or at the highs or whatever place you entered, you need to determine whether it's a good place to hold it for a trend or just simply to get a 2-to-1 on it. Salim, if it breaks the retest and goes lower, it doesn't mean that you should short it, because if it breaks the range, break up, retest, and then breaks down, it doesn't mean that it's going to just be a short. It could just go into the middle and then continue. You need to develop a bias, especially if you're trend trading. If you're scalping, just trade it literally any direction, any place, because you're trading that 1 minute candle, and the 1 minute candle will just be nothing, right? It is 8 time IG. And this is actually really good. When I'm trading at 8 times speed, I'm basing my decisions like milliseconds. It's so fast decision basing. You'll see that sometimes my entries are a little bit late because it's just so hard to look at all the charts at 8 times speed. But this makes it way, way easier when I'm trading the live market at 1 time speed. It's so slow and there is enough time to put the decision. I mean, when is it good to add shares? Do you based on MC? So Lydia, sometimes you need to enter before it makes the new high when it's really obvious, and sometimes you need that new high for the confirmation. Yeah, I trade the market replay at 8 times speed just to save myself some time. I can't trade it at 1 time speed. And I trade around 6 stocks every day. Every single day, 6 stocks. If you do that, you'll be really good at reading the price action. Sarah, I am doing this every single day for BBT. And it's something you could use, and it's something also helps me, right? Go to the technology, go to the weekly simulator practice, and look at this. There is an archive for like 4 months around here. If you click on it, moderators watch list, these are the moderators watch list for that week. So I personally watch my stocks. I don't remember what I did around 4 months ago, but I know that my stocks are range bounded. I know my stock selection and my style is on my stocks. Those that are not watching. If you are, for example, trading Thor's style, you might want to watch Thor's watch list. If you are trading a Tiffany style, watch her stocks. If you want scalps, you might watch Andrews or Brian's stocks. If you want to trade the high of the day breakouts, or you could watch Mike's and John's stocks. These are not videos, these are stocks you could watch in the market replay. Yeah, it's really helpful. I mean, you need to do that, I would say every day, but just depending on your free time, you might want to do it for a long time. The more you do it, the better you become. Technology tab, and then weekly simulator practice. All right, so Mari traded Zoom. Let's take a look at Zoom first of all at the bigger time frames. That's our Zoom. So Zoom on the daily chart, it's weak, right? Overall, it's below the moving averages. But I don't like Zoom so much for one reason. We're going sideways. And when we are going sideways, you could literally go either to the upside, either to the downside. Looking at the 60-minute chart, double indecision candles. This is telling us that it could go to the upside and it could go to the downside. So you could literally trade this thing to either direction. Because of that, I personally would avoid it. I want to have some bias and I want to see where the stock is going to go. At the open, you're having the bearish engulfing crack, bullish candle get engulfed by bearish candle, and a new 5-minute long. Because we said you could trade it to the both directions, you could also take it to the short side, and that's what Mari did. Partial short, that's the stop loss. Easy 2 or 3 to 1, really good. Partial multiple times because there is a strong moving average, 50 here and 50 here, I assume. Pulling back, and you are adding to the short side. Was this adds to the short, or it was long and partials, Mari? If it was long, I really can't see why it took too long, but I assume there might have been like a double bottom because this is like 10 minutes consolidation around here on the 5-minute chart, somewhere at closer to the 200, which is still not a bad long, because if you take a look at this thing, 1, 2, 3 candles to the downside with no pullbacks, and we could expect that there will be a pullback. If there is a double bottom or some pattern in the 1-minute chart and you take it to the long side, surviving the pullbacks, which is nice, partially all the way up. That was good. Added, I personally wouldn't have added. Right, this is like a fake breakout. It's breaking and immediately going down. Wouldn't have longed it right there. And this long around here, I would also not have taken it because remember this: first time the stock bounces of the support. Second time it reaches it. Not every time, but most of the time it breaks it. This is the way it works. Like first time bounces, second time breaks it. Especially if it's trend continuation. So I would have avoided this long around here. Other than that, you did really well and good management. Gigi, go to technology at Bearable Traders, and then weekly simulator practice. Technology, weekly simulator practice. Unfortunately, they fixed it, guys. Like that stream mode, and you can't do it during market hours anymore, which I don't know why they did this. It was working. I wish I didn't update my desk. But if that wasn't the case, I would have done it for you, like with you for fun. I would have let you pick any stock in your mind from any day you struggled at, and I would have traded it in front of you at 8 times speed, following my rules just to show you how it goes. Whether it's winner or it's a loser, I don't care about it, but that would have been fun. So Danny, let's see what you traded. Yeah, you could trade it outside market hours. No, it's the data isn't coming from a BBT. You just go to that stream mode, you choose replay, you apply, you will not get this error back then. Then you choose the stock. For example, in Technology Center, you will see that Ayman at, for example, January 12th was watching AMD, and then you download it. And you could see that I'm having a lot of stocks around here, you see? The ones which I'm practicing. You see, anyway, like a lot of stocks right there which I'm practicing, and it's my favorite. Anyway, you download it, then you load it, you choose the day which you download it, okay, and then play it. Yeah, you can grab the data after hours. You can watch any single stock, it's not necessarily our stocks. If your style is different, just save your watch list every single day in your journals and then trade them in the future. So Danny traded Apple. This is awesome. I like this trade. Really good entry. Nice surviving the pullback. Look at this. We discussed this, right? It's going up. It's retesting. You are taking it at the break. After the hammer, stop loss, the last level it bounced off. It's going up, giving you a higher low. I would have added and moved my stop loss. No reason to have the stop loss down there. And then you exited at the round number 127. Really good. I like that. This pullback didn't scare you out. And I love that as well. Because it shouldn't scare you, right? As long as it's making higher lows, it's good. If it's breaking this support, then yeah, you could be a little bit hesitant and just bail on the trade. I agree with you, Yannick. I wish they had the level 2. It would have been perfect, but unfortunately they don't. All right, let's see this. INTC for Dell. So Dell trade decent to the long side. I like this. Like if you take a look at the 60-minute chart, same thing. You're having a clear, decent range. You're having a fake breakdown around here. Market opens. It's giving us 1 minute open range breakout where Dell took it to the long side, took his partials, added on a small ABCD pattern on the 1 minute chart with a 5 minute open range breakout. Let's take a look at the 5. Yeah, with the 5 minute open range breakout. Unfortunately, that didn't work out and it got Dell stopped out. Now, this is the mistake. I think this was a short. Am I right, Dell? You don't want to flip your positions every single time. Build that bias. You see that the stock's strong, wait for a strong setup. These around here, these drop. It's a retest. So you took it to the short side at the retest area, and we know that this retest could hold. And even if it's not holding, it could just drop a little bit, fake you out, and go back up. Right? So build that bias and trade that bias. I mean, just not literally trade the bias. If there are confirmations, wait for it. If it just dumps down, let it go without you. Now, that's your entry again to the long side, and I like that. Partial all the way up. Decent add on a 3-bar play up here. I don't know why it got you stopped out again. Yeah, I think you shorted it, right? Was this short or it was stopped for a long? Okay, I see that. I see that. So there was a wall around here, which is why you took it to the short side. I mean, honestly, I wouldn't have done that. There is a 3-bar play in the 5-minute chart, and 3-bar play is a continuation pattern to the long side. Because of that, I would have avoided this short around here. But other than that, I see that your longs were really big. You managed them really well. Your losers are small. You ended up green on this trade. But remember, when you are trading, you need to avoid those. And avoiding those, having a checklist for your setups, but you will be able to avoid this by having a checklist for your setups. Yes, it looks weak, reverse ABCD pattern. Yes, there is a bearish engulfing crack. The bullish candle gets engulfed by a bearish candle, and then it went to the downside. But remember the candlestick pattern? What did I say there? I said that you don't trade candlestick pattern only because it's candlestick pattern. So you don't trade the bearish engulfing crack only because you see a bearish engulfing sandwich. First of all, you look at the bigger time frames. You find the setup, and the candlestick confirmation is just a confirmation before you take the trade. Around here, the stock is going up and it's retesting. You definitely don't want to take it to the short side only because you're having a weak candlestick pattern. All right, let's see Bobby. GPRO. So you traded this thing to the short side for a parabolic reversal after a fake breakout, which unfortunately didn't work out. That was good, Bobby. So you're having a lot of consecutive 5-minute candles. You're having a fake breakout. This happens a lot on ABCD pattern, which fakes people to the long side, and then it just drops down. This happens a lot. I would have also considered this one to the short side. It was really good, but unfortunately, it got you out. You re-entered on it to the short side, which was annoying. I would also not have put my stop loss all the way up there. I think I would have put it somewhere in the middle, which would also get me out, unfortunately. And then you are entering one more time, because this is like so obvious, right? It's already like so extended, increasing volume with half day, shooting star, took it to the short side, and then partialed all the way down. Add a little bit late. I wouldn't have done that unless you're having at least like a reverse ABCD pattern. You don't want to add on the way down. But other than that, this was a huge move. So I bet you made all the losers and more back. Well done, Bobby. Oh, I see. That was hotkey mistake. Okay. Alben, I have a question. What's your average R return right now? Do you keep track of that? Microsoft was really good around here. I like that entry. Looking at the 5-minute chart, 3-bar play. We discussed this, right? New 60-minute high, strong on the daily chart, got into the long side, but you bailed on it. Don't let those wicks scare you out. You are in a good position. You are with a good stop loss. Just hold on to it. So your average street 4 hours. That's awesome. Guys, I remember I was talking to Alben a year and a half ago. Was it a year and a half ago, Alben? Or a year ago? I don't really remember exactly. I think it was a year or a year and a half ago. And Alben was scalping it so much. His R's were so small. I think he was losing more than he was making at that stage. But right now, he's getting the average of 3 to 4 R. And that's really good. I like the progress, especially when it's happening in a year or in a year and a half. Did you try trading live every now and then? Or it's still in simulator, Alben? I mean, no rush. I'm just curious. So the 3-bar play is when you're having a wide bar candle followed by a small bar candle followed by another wide bar candle. This is a bullish candlestick pattern. Your entry is on the 3rd bar, your stop loss is below the 2nd, and you take it for trend continuation. You don't take 3-bar play when the stock is going to the downside. Like, for example, stock is downtrending, pulling back, and then you're having here a 3-bar play. You don't take this thing to the long side. You take it only with the direction of the trend. Peter B here, remember, he's having around 70% win rate on 3-bar plays, as far as he told me. So he's trading those. These are his favorite. IG, I don't care much about volume on my trades. You'll see me not talking a lot about volume when I'm doing the reviews. The only times I care about volume are igniting volume at the half of the day for parabolic reversals, exhaustion volume. And sometimes igniting volume when the move starts. Anything in between about volume, I don't care much about it. No, that's not useful. It works for a lot. But for me, I do well without it. It just confuses me a little bit, gives me a lot of false information, for my style at least. Oh yeah, can you send another one? This is just a little bit cut. I mean, I'm consistent without volume, right? So why should I try to dig deeper right there? My win rate is really good. I had last week, Tuesday, 1 and done, Wednesday, 1 and done. Sorry, Wednesday, 1 and done, Thursday, 1 and done, Friday, 1 and done, and today, Microsoft, not 1 and done, 3 trades, but again, like the accuracy is huge for me right now. I would say that in February and March, it's over 50%. So if I'm having over 50% win rate with an average of 3 hours per trade, and I'm getting more sometimes, for example, my today's Microsoft is around 6 hours, I don't want to just try to confuse myself more. And I trade also later on the day. You see me sometimes taking the trades in the afternoon when I'm on the microphone, but I try not to stay so long. My concentration dies in around 1 hour. I try to call my day at 10:30 and then take a break. So let's see what you did around here. CCIV, we discussed it. That was really good. You took it for 1 minute open range breakout at the open and it got you stopped out. This is not a bad trade. This is a really good trade, which unfortunately failed. Now, this is a late entry, unfortunately. The entry would have been better exactly around here. So you're having a bearish engulfing sandwich, which is a bullish pattern. That's your entry. That's your stop loss, the middle, right? And then go for your risk to reward. Now, long around here was risky. Why is that? Because this is a parabolic pullback, or it just forced itself down. And in these cases, you want to see a W shape. And as long as there is no W shape, you don't want to take it to the long side because you're afraid it could be a reverse ABCD pattern. Then it could be also another reverse ABCD pattern, right? But now, look at this. Now you're making higher, low, higher, low, higher, low, and you're breaking up. You could try it to the long side. Stop loss, the last level it bounced from. Add stop loss. Add stop loss. You see, you don't want to add to your position when it's just dropping down. It could just do this forever. And every time you're trying it to the long side, it will get you out. Long, out, long, out, right? You want to make sure that it's starting to go in your favor before you are forcing it to the long side. So MO traded Apple double bottom on the 1 minute chart. That is cool. Partial all the way up here. Not bad. Good entry. Honestly, I wouldn't have added here. We discussed this, right? But at the break on the 1 minute chart, it's not that bad. There are double 1 minute charts. Should have had also the 5 minute chart, but it's okay. I assume this is after the pullback looking at this one. So that's not bad. Let's take a look. Actually, I need to check the 5. We actually reviewed this one, but yeah, I mean, an entry at double bottom on a strong daily chart, on a strong 60-minute chart, that was good. Add around here on the way down, you want to avoid it. Add around here after the fake break would have been a decent one. You added a little bit late, but other than that, it was good. So let's take a look at one last trade because we're running out of time around here, and unfortunately I'll not be able to review 2 trades for everyone. How do you get those horizontal volume bars in the chart? Anyone who is using the horizontal volume bars in the chart, could you tell Marketman how to add them? I personally am not using them, so I'm not really sure how to do that. So you tried this one for a parabolic reversal on MU, right? 5-minute chart. Remember, we discussed this. You don't want to take it on this third candle. Why don't you want to do that? Because it's close to view up. When you're having view up between your target and your entry, you just don't take the trade. This entry was good, but unfortunately it failed. I think Nadia took it around here, but then it gave you a good pattern. So you should have re-entered, especially parabolic reversals. You could eat few stabs before it make it work. And strict rules help around here. This one shouldn't have been taken. This one was awesome. Didn't work out. Re-enter one more time. 2 attempts. 1 fails. 2nd works. So that's it, guys. Do you have any questions? Yes, entry 1 was bad. You should not have taken it at all. Entry 2 was good, which didn't work out, but should have re-entered on it. So, all right, guys, I'm going to do a recap on my trade. I'll post it on YouTube. If you're interested in all the details, my ads, how I managed it, what mistakes I did, you could check it on YouTube. And we'll discuss it there. So the first one was bad. If you check my parabolic reversal webinar, I said don't take parabolic reversals, even if it's like the first 5-minute candle. If you're having VWAP on the 5-minute chart between your entry and the 9 EMA on the 5-minute chart. That's why it was bad. VWAP was close. You're welcome. Thank you all for sharing your trades, winners and losers. The second trade review session, it will be Thursday, 12 p.m. Eastern, and I'll talk to you tomorrow, 12 p.m. Eastern, in the chat room. Bye-bye.